Okay, I think we got everybody back. Hope you enjoyed that networking. I'm going to remind you here on the networking on the screen, you can see where I've kind of marked where the chat button is. It's in your control panel for Zoom. And you can click on there. Please provide your name, company, phone number, email, and
Where's the chat button
location.
on here?
At the end of the meeting where you put that information in, you'll see these little three dots. And if you click on there, you can hit save chat and it saves it as a text file for you. So let's get this thing rolling along here.
That's right where they chat.
Here's
Please provide your oh chat. I don't see it.
All right, let's see. So my controls will work. All right. I always like to start the meeting in memory of Gene Guarino. Gene was instrumental in the founding of the RAL Academy, the RAL National Association, and introduced thousands of people, including myself, to the model of residential style assisted living. Gene's motto was do good and do well. Unfortunately, we lost him back in 21 to COVID. And next, I want to point out our website, and that is DAALR.com, which I love the acronyms. It sounds like dollar. And that's the Denver Association of Assisted Living Residences. If you are an operator in Colorado, it's very important that you would want to go to the Helpful Links page. And on that Helpful Links page, the very first two links you need to know like the back of your hand. This is the Chapter 7. These are all the rules and regulations. And that date's incorrect. I actually have it connected to the newest regulations and the Chapter 2. So as an operator in Colorado, this is what you need to know completely. And we always ask people to join our Facebook page, Denver ALR. And I'll drop a link to that page into the chat. Matter of fact, I think I'll just do that right now before I forget about it. So please join and be part of our social network there. And next, we like to thank everybody that has signed up on Meetup. That gives us an idea of how many people are here. And if you enjoy the meeting and they ask you for feedback, we love to have a 5-star rating. So please give us your feedback and hopefully it's positive. I'm going to add that particular link into the chat as well while I'm thinking about it. And next. Let's see here. I might be going the wrong direction here. All right, sponsors. Assisted Living Mansion, Brett Chakevas. He's put together a really nice program for high-end 16-bed models. And also on his website is a great collection of training videos. Most of these videos are geared toward experienced operators. So to attend this and see what he has going on there, you can navigate to palm.university to get more information. Our next sponsor is the RAL National Association. RALNA is the largest free association for RAL businesses. RALNA represents the interests of RAL providers. Their mission is to help RAL professionals get the resources they need and give them a voice at the national level, ultimately lending to improvement of the quality of senior care. With a far-reaching presence, RALNA offers robust benefits to assisted living owners, operators, managers, caregivers, and investors alike. And if you're new to assisted living, I recommend going through the course with the RAL Academy. This is basic training for running an assisted living. So if you're just getting into this space, then this is the place you want to go. We have a link to it directly on our website, and you can go to their site, ralacademy.com. In the chat, I've put links to all of our sponsors, so you can just follow that chat and get to our sponsors as well. Our next sponsor is Assisted Living Marketing with more than a decade of experience. They have customized services that work for small, large, and multi-location communities. Assisted Living Marketing is your trusted partner for digital and print marketing in the assisted living industry. And our next sponsor is Senior Care Administrative Coaching. This is Janet Cornell. Janet provides consulting in Colorado for your assisted living home. She can also provide the 40-hour administrative training, staff training, and employee file compliance and compliant documents. She will also do mock surveys. So if you're in Colorado, you'd much rather have her go through your home and tell you what's wrong than have the state go through your home and fine you $1,000 for every infraction. So you can go to her website, scacjanet.com. And I do have a link to her site in there as well. Next, we have the Investment Community of the Rockies, also known as ICOR. And ICOR is Colorado's only nationally recognized and award-winning real estate investors association, serving Denver Metro, Colorado Springs, Fort Collins, and Northern Colorado, as well as real estate and rental property investors across the state. And our next sponsor is Pinkowski Law. They are not only Colorado's assisted living lawyers, but they help people across the nation. They help developers and operators of assisted living and group homes locate and establish their facility so they can focus on the business of caring for people. They will act as your advocate or work with your local council to encourage compliance with the Fair Housing Act provisions. They're very, very good at that. So if you're fighting an HOA or zoning, these are the folks you want to see. And you can go to pinkowskilaw.com to visit their site. And next, this is one of the groups that I am associated with, the Better Way Funding. And we do lease options for group homes where we buy the home and do a triple net lease to the operator, giving them an option to buy it from us in the future. If you are interested in this program, if you're trying to expand your business, you can go to ralleaseoptions.com and see what the program is like. And another one of our groups, this is the group that buys them and does the leases. This is ABW Capital Ventures. We've got several different funds. This is one of them we have going right now. And we have 3 opportunities, although we've sold out of that Las Vegas opportunity. We still have the Greenwood Village and the Evans, Georgia opportunity. If you are interested in investing with us, then you can reach out to me directly. You have my email and my phone number on the chat. And next is my business, Grand Avenue Business Brokers at Better Way Realty, where I hang my license. Over 30 years of business experience. I was thinking about the other day, I'm almost at 40 years. Over 80 assisted living transactions, over 100 million in those transactions. I am a certified business intermediary and a certified senior housing investment professional, level 2. So obviously, I specialize in assisted living. My website there is grandavenuebrokers.com. And we have a lot of current activity right now. 24 beds, South Denver, 76 in Las Vegas. That was one of those opportunities that we have listed. We have 173 on the Western Slope. We're closing next week. 66 beds in Georgia. That is one of our investment opportunities. 14 beds in South Aurora, 8 in Castle Rock, 10 in Parker, 16 in West Denver. This, let's see, one of those is another one that's available. I think it was a 24 that's available for investing as well. And then 10 in South Denver, and the 89 bed package in Eastern Colorado is now under contract. So I know it's an odd number, 40 million and change, but that's what we're doing right now. So if you call me and I don't get back to you right away, I'm a little busy. Colorado Assisted Living Association. This is the Can-Do Association that's known for representing the assisted living industry in Colorado. The association is committed to assisting, promoting, informing, educating, and advocating on behalf of the assisted living residences and professionals. they've done great work at the Capitol. So if you own a facility in Colorado, please join this group, help support them. They do a lot of work on behalf of this industry for Colorado. And I want to announce next month is our 100th meeting. Can't believe it's been that long. And we're going to do it live in person so that we can do some networking. For those of you that are out of state, I'm not sure if I'll be able to pull off a hybrid. And we started initially as the Denver Association doing live meetings, and I thought it was fitting for the 100th meeting to bring everybody together. We're actually going to meet at what used to be the Hacienda, which is the restaurant that we were meeting at in 18, 19, 20 before COVID. And we were getting about 50 people there on average for our meetings. It's now Los Dos Portrillos. And I've talked to them. We're going to rent a room and we're going to invite everybody that can attend to join us and shake hands and have a drink and have some dinner. And that's how we're going to celebrate our 100th meeting. Okay, well, enough about all that. I want to introduce Bill Neville. And Bill is with Intrust, and he's agreed to chat with us tonight about this cool topic about self-directed retirement accounts. Bill, I'm going to turn the screen over to you.
Thanks, Vern. All right, let me do a screen share. I got a PowerPoint presentation. Feel free to ask questions as I'm going along. If you have a question, if something comes up in your head, you don't have to wait until the end. Let me get this up. Share. And then set up as a slide. Okay. Okay, everybody sees that, yeah?
Yes.
All right. So before we get into this is I'm obligated or required to put this up. So the Interest Group, we are a custodian and record keeper of what are called self-directed retirement accounts, which I'll explain. We do not provide advice. We do not endorse or recommend any particular investment. So anybody who invests using their retirement account, whether it's something non-traditional like assisted living or doing notes or all the different things that we'll end up talking about, we encourage everybody to seek the assistance of advisors, attorneys, et cetera, et cetera. But Entrust, our role is just custodian and record keeper. So a little bit about us. We are, it says administrator. We are a custodian. So we have a trust company that acts as custodian, and then the Entrust Group does all the administrative / record keeping for the retirement accounts. We've been in business since 1981. We're still privately owned by the person who started the company in 1981. And we currently hold about $5 billion in assets. We have about 25,000 existing account holders at the moment. The majority of our company and majority of our staff are certified IRA service professionals, including myself. We have offices throughout the United States, although we're headquartered in Oakland, California. We have a national continuing education program, so we provide certain continuing education credits for CPAs, for realtors in certain states. And we do like local and national events and webinars whenever the opportunity presents itself. We have a monthly educational webinar that we do every month where we often bring in subject matter experts. And I was actually, as Vern was going through his thing, thinking that maybe assisted living is a topic that we need to add to our upcoming list of educational webinars. Vern, that's a shout out. So, you know, we can talk about that afterwards. So what we're going to be talking about, what exactly is a self-directed IRA? What are the benefits? The different plan types that you can self-direct, some of the different options that you can invest in, and what are the restrictions. And so a very important topic, what's considered a disqualified person and what's a prohibited transaction associated with disqualified persons per the IRS rules. We're going to give a few examples of types of investments and or how it would work, how to get started, and then again save time for Q&A at the end. But I will, reiterate. Feel free to ask questions. I'm going along if you want. So first of all, what exactly is a self-directed IRA? So I'm going to bring up the 3 bullet points that we have on here, which says retirement account in which the individual investor is in charge of making all investment decisions, gives you a greater opportunity for diversification. You're not limited to just stocks, bonds, and mutual funds. And all investments are held by an account administered by a custodian or trustee. So what that means is when you have a retirement account, whether it's a traditional IRA, a Roth IRA, a SEP IRA, 401k, pension plan, any type of retirement account, it requires a financial services company to act as custodian of that retirement account. And most people's custodian is a bank or a brokerage firm. And those banks and brokerage firms limit you to, or limit their account holders typically to only investing in stocks, bonds, and mutual funds. Like you have a 401k with Vanguard or you have an IRA with Charles Schwab, you can either invest in like a publicly traded asset, or they might have a list of funds that they can offer to you, like Putnam funds and companies like that. But if you went to them and said, I want to invest in real estate, I want to buy a rental property inside my IRA, or I want to invest in this startup company, or I want to invest in precious metals, or I want to invest in digital currencies. These are all investments you're allowed to be held inside a retirement account, but banks and brokerage firms are typically unwilling to hold those types of investments. It's not that they can't, it's not that they're, that they can't if they wanted to, but their business model is not set up that way. Whereas with a self-directed custodian like Entrust, so what makes it self-directed with us is 2 things. One, we're not a fiduciary. We don't provide advice, right? Merrill Lynch, Charles Schwab, Fidelity's, companies like that, they're fiduciaries, which means that whatever you invest in, they essentially have a fiduciary obligation to tell you whether they think it's a good or a bad investment. We don't have that. You make all your own investment decisions. And 2, we don't limit you to just stocks, bonds, and mutual funds. From an Entrust standpoint, we will hold any investment that's not specifically prohibited by the Internal Revenue Code, right? So what is a self-directed IRA? The account holder makes all the investment decisions without any due diligence or advice coming from the custodian, and you're not limited to just stocks, bonds, and mutual funds. So if Fidelity or somebody like that tells you that you have a self-directed IRA with them because they're not giving you advice, you're picking all your own stocks, it's not really a self-directed IRA because they're not letting you invest in non-traditional investments. If you said to Fidelity, I want to invest in real estate, they're going to tell you, they might tell you you're not allowed to do it. You're allowed to do it. You just can't do it with Fidelity. Okay. So what are the benefits of self-direction? Well, it gives you the ability to take more control over your retirement account. Instead of relying on a broker or an advisor to pick some mutual funds or stocks and tell you, like, buy this, large cap fund and this small cap fund and this, index fund and maybe some stocks and some bonds, and look how well you're diversified. But you're pretty much tied to the market, right? So when the market goes up, they're pretty much all going to go up. When the market goes down, they're pretty much all going to go down. Whereas if you invest in real estate or you invest in metals, those aren't necessarily going to go in the same direction that the market is. So it gives you the ability to invest in things that you have control over. It also gives you true diversification, right? So again, as I mentioned, when you're holding a bunch of different funds, even if they're, maybe an international and a small cap and a large cap, and your broker's telling you that you're diversified, it's still all in the market, right? So with a self-directed IRA, you can invest in other things like real estate or private equity or I'll try and make this my presentation is very general self-directed IRA stuff. I'll try and tie it back to the assisted living as much as possible, but most of it is very just general stuff. So I'm going to be talking about a lot of different types of investments that you can make. And you get the tax benefit, right? So when you invest in real estate using your personal savings, right, and you get rental income coming in, then you have to report that rental income, right? Then you get to deduct any expenses. But when your IRA owns an investment property, all the rental income gets paid directly to the IRA. So you don't have to report it because it's being held inside a tax sheltered entity. So you get the tax savings, and obviously, depending upon the type of retirement account, your contributions can lower your taxable income. And then you get tax deferred or tax free if it's a Roth IRA, tax free growth. I mean, that's just the rules of IRAs, whether it's self-directed or not, right? But it gives you the ability to do that. So what can you self-direct with Entrust? Well, a traditional IRA, a Roth IRA, are individual retirement accounts. Then SEPs and Simples and 401ks, those are employer-sponsored plans, right? So if you want to have a simple or a SEP or an individual 401k that you want to self-direct and you want to open that type of account with interest, you either have to have your own business or be self-employed in which you're establishing an employer-sponsored plan, or you work for an employer who is offering you one of those, right? Now note the 401k says individual 401k. We offer an individual 401k. What's the difference between that and a regular 401k? Like I work for the Entrust Group, they offer a 401k. It's not an individual 401k because we have employees, right? An individual 401k is only available to business owners and the partners in the business and their spouses. So if you own a business and you have non-owner employees, you're not eligible for an individual 401k. And then you can also self-direct health savings accounts and Coverdale educational savings accounts. So if anybody doesn't know what a health savings account is, they're great. I have one. You need a high deductible healthcare plan, and then it allows you to make pre-tax contributions to the HSA, means you can lower your taxable income, and then you can invest it and grow it. It's not like a cafeteria plan or 529 where you have to use it within a year. You can grow the HSA as big as you want, and then if you use it for medical expenses, any money that you take out from medical expenses is tax-free. So it's like a Roth from that standpoint, but only for medical expenses. HSAs are awesome. I think they're criminally underutilized. So what can you invest in inside a retirement account? So like we kind of have mostly talk about real estate here, single family and multi-unit homes, commercial, land, limited liability corporations. Really any privately held company can be invested inside a self-directed IRA. Real estate offshore, notes. I'm going to take you down to that bullet point at the bottom, almost anything. You can invest in almost anything you want inside a retirement account. We had somebody invest in cattle inside a retirement account with us. Another person invested in a racehorse. Another person invested in an airplane, right? Their IRA invested in an airplane. They leased it out. The IRA received all the income from the lease. Like you can invest in almost anything you want inside a retirement account. There are only a few things you're not allowed to invest in, and this is what they are: collectibles, life insurance, and S corporations. So you can invest in any corporate structure. You can invest in C corps, obviously, limited liability corporations, limited partnerships, but you can't invest in S corps. And then life insurance, your IRA can't hold, your retirement account can't hold a life insurance policy. And then collectibles. So for example, work of art. Notice that metals or gems and stamps and coins have a little asterisk next to it because there's a difference between precious metals like gold, silver, platinum, and we have the exceptions down there, palladium, which are investment grade versus what's a collectible like a coin collection. So the dealer who sells you the metals will know whether they're selling you what's investment grade, and it's based on the purity or the fineness of the metal, right? So those are the only things you can't invest in: collectibles, life insurance, and S corporations. Other than that, as long as it's for investment purposes only, and when I talk about prohibited transactions, I'll explain what I mean by that. You can invest in pretty much whatever you want. So again, like with the collectibles, for example, you can't buy a work of art. You can't invest in a work of art, but you could invest in an art gallery, right? You can't invest in like wine, for example, but your IRA could invest in a winery, right? So art gallery, winery, those are businesses, but it can't invest in a collectible. Okay, so we want to talk a little bit about what are called disqualified persons and what that means when it comes to prohibited transactions. So first I want you to see who's a disqualified person. So when it says you, that means the account holder, right? So the account holder's spouse, the account holder's ancestors, so parents, grandparents, etc., the account holder's lineal descendants, so children, grandchildren, etc., and then spouses of lineal descendants. Then it says IRA fiduciary, but that doesn't really hardly ever applies. If you have a CPA or an advisor, somebody like that would be a fiduciary. A lawyer would potentially be a fiduciary for you, so they would also be a disqualified person. But it's usually more about the family members. So what does that mean? There's written into code that says that there are certain transactions that are considered prohibited transactions, which has any improper use of an IRA or plan by the plan participant or disqualified person is a prohibited transaction. I'm going to give you some examples. The part under that, you're a disqualified person if you are in the 10% more partnership, highly compensated employee. that's only that's only if you want to invest in a privately held company that you also hold ownership in. So I don't want to get too bogged down into the weeds with that. The way it's written into the code is a little bit of ambiguous, but I want to focus a little bit more when we're talking kind of about real estate. So some examples of prohibited transactions. So borrowing money from a disqualified person. So an IRA can borrow money, right? But an IRA can't borrow money from anybody that's a disqualified person. So you can't loan your IRA money, right? If you have a certain amount of money in your IRA and you want to use that IRA to go buy, real estate or invest in a assisted living property or something like that, you can't take your personal funds and loan your IRA to get the money into it, right? You, your spouse, your ancestors, your lineal descendants. So an IRA can borrow money. There are financial institutions that will lend money to an IRA. Or an IRA can borrow from pretty much anybody other than a disqualified person. If your IRA owns a property, right? If you've used your IRA to buy an investment, to buy a property, for example, and you want to sell it, you can't sell it to a disqualified person. So you can't buy a property directly from your IRA. You also can't sell a property that you own to your IRA. So an IRA can't buy from a disqualified person either. Using an IRA or plan as security for a loan. So if you go to a bank and say, I want to borrow money and I've got my retirement account here and my retirement account's valued at $1 million, I want to put that up as security to borrow money personally, that's prohibited. You're not allowed to do that. If you have an asset inside your IRA, like a piece of real estate, and you want to go and borrow money personally, you can't use that piece of real estate that's owned by your IRA to borrow money personally, right? So that's prohibited transaction. This is a big one. Buying a property for personal use. Somebody have a question?
I do, Bill. Can you partner with your IRA in a deal like in
You
an
can. You can
LLC?
partner. Yep. I'm going to get to that.
Okay.
So you can combine your IRA money with other money, including your own personal funds, to make an investment, but it has to be a new investment, right? So, like, if your IRA already owns a property, you can't then add yourself on, say, okay, I want to come in as a 50% owner on a property that my IRA already owns. The same thing if you own a property personally, you can't come on and say later on, I'm going to add my IRA on as a 50% partner, right? But if you're buying a new property or a new investment and you say you want to take blank percent from your personal savings and blank percent from your IRA and partner them together, you can do that as long as it's a new investment. I'll explain what I mean. Like your IRA has a specific naming convention. So when you buy something in your IRA, when you buy real estate in your IRA, it's not held in your personal name. It's held in the name of your IRA, right? So with us, the name of your IRA would be the Entrust Group for benefit of, and we usually just shorten that to the letters FBO, the Entrust Group FBO, your name, IRA number, and then your account number. That's the full name of your IRA. So when I say things like your IRA can borrow money, your IRA can go on a loan, right? Like if you want to buy real estate and you have a certain dollar amount in there and you need to borrow more money, there are financial institutions that will lend, banks, like we have a list on our website, but the borrower on that would be the Entrust Group FBO, your name and account number, right? So on title on the property or on title on whatever you invest in, the title holder would be the Entrust Group FBO, your name and account number, right? If people are using their IRAs to lend money, right? I had a conversation earlier that was interested in this because they potentially, for their business, might want to raise capital. They raise private lenders lend their money, and some of their private lenders might want to use their IRAs. The lender on the note would be with us, the Entrust Group FBO, their name and account number, right? So when the note gets paid back, it gets paid back to the IRA, right? I'm getting ahead of myself. I'm probably going to get through some slides really quickly because I'm kind of explaining it all right now. So buying a property for personal use with your IRA. So this is a big one. We oftentimes get people who want to buy, a piece of real estate and use it for personal use, like as a vacation home, second home. That's prohibited, right? So the individual, their spouse, their ancestors, their lineal descendants, spouses of lineal descendants are all disqualified persons, which means none of them can use a property that's owned by the IRA of that disqualified person. And I think And then investing in a company that's owned by, so if you already have a company, you can't, all right, I'm not going to say you can't, you likely won't be able to use your IRA to invest back in your own company. But if I went back to the one screen that showed, 10% ownership, there are potential that you could use your IRA to invest in your own company. It would depend upon your ownership, percentage ownership, and the role that you have in the company. I want to come back to the buying a property for personal use with IRA plan funds. Also, a disqualified person is not allowed to put sweat equity into a property owned by the IRA, right? So if you're somebody who likes to do fix and flips, right? And so you want to buy a property that's a fixer upper, and then you're going to fix it and then turn around and sell it. You want to do it inside your IRA, that's fine, but you can't do the physical labor yourself, right? You can't be the one swinging the hammer. You can oversee the work, you can hire the people, you can tell them what work needs to be done, but you can't be the one doing the labor. So when it comes to the assisted living, this could be applicable, right? Because if you want to use a retirement account to be an investor in a property that you are going to, set up as an assisted living property, you can't be in there running that property, right? That's considered a prohibited transaction. You or any other disqualified person. Your IRA can invest in it, but you have to be very hands-off associated with it, right? So the same concept of the sweat equity, that would also apply there. So if anybody here is considering like using their retirement account to become an investor or a partner in an investment in an assisted living place, like that's great. Just make sure that you're not like running it, right? Like it has to be more for investment purposes only. I'm happy to take questions on that if we want to get into that a little bit more. So what are examples of acceptable transactions? So we mentioned partnering with yourself on a new deal. That's the key, on a new deal. So your IRA, the Entrust Group, FBO, your name and account number, and your name could each be on title on the property. And when it's being paid out, right, when it's the rent or whatever is being paid out, your IRA would receive its percentage and you personally would receive your percentage. That's how partnering works. Says partnering with your cousin, like a cousin's not a disqualified person, so you could add them as a partner at any time. Partnering with your spouse on a new deal, right? Again, on a new deal is the key. Leasing property to your siblings, right? So as I mentioned, the disqualified persons, you, your spouse, your ancestors, lineal descendants, spousal lineal descendants. You'll notice it's not all family members. Siblings are not listed on there. Cousins, aunts, nieces, nephews, like they're not listed as disqualified persons. So if your IRA owned a property and you wanted to lease it, you could lease it to your siblings, to your aunts, uncles, cousins, just not to yourself, your spouse, ancestors, and lineal descendants. All right, so we're going to give us some examples of like how this would work. So your IRA wants to invest in a startup company, or you want to use your IRA to invest in a privately held company. So you would submit to us the subscription agreement or the investment agreement. It must be signed by Entrust on behalf of the IRA, right? So the name of the IRA is going to be the Entrust Group, FBO, your name, IRA number, and then your account number, right? That's who's going to be the investor in that privately held company. You submit the paperwork to us, like we say subscription agreement, whatever the investment, the purchase agreement for the shares or the percentage in the company, we sign it on behalf of the IRA, and then we send the money from your IRA directly to the company, right? So we're not giving you the money to then go invest. You tell us what you're going to invest in, and then we invest it for you, okay? So any revenue, any income, any dividends, capital calls are done into and out of the IRA. So any income generated from your investment flows into the IRA. Any expenses get paid outside the IRA. So in the case of a private company, there's sometimes capital calls. And ability to invest in a private company can be affected by personal ownership and personal relationship with the company. Okay, so I mentioned that earlier. The IRS has a lot of restrictions associated with using your retirement account to fund a company that you own and run, right? So It's not completely restrictive. It depends upon the percentage ownership. It depends upon the role you have in the company, whether you're a passive investor or are you managing it. You could have personal ownership and be passive. The percentage that you can own goes up much higher. So you can own up to 50% and still have your IRA invest as long as you're not involved in running the company. If you're involved in running the company, it drops to 10%. You have to be below 10%. I will mention that the IRS does have this thing that's called rollover for business startups, ROBS, which allows people to invest as much money as they want from their retirement account back into their own company. But there's two primary criteria associated with that for it to work. One, the company has to be structured as a C Corp. And two, the retirement account has to be a 401k. It can't be an IRA. So if you have your own company and it's a C Corp and you have a 401k and you want to use some of that money to help fund your own company, you're in luck, you could do it. It's called ROBS, rollover for business startups. IRA purchases of rental properties. So we use Davis, California as an example. Again, your child, if you like, for example, you have a kid going to school, there's a college in Davis. If you have a kid going to school, they can't stay there. They can't rent it. They can't stay there for free. They can't pay fair market value because the child is a disqualified person. An IRA can borrow money to purchase real estate, or honestly, an IRA can borrow money to invest in anything you want, as long as that loan is structured as a non-recourse loan. There is a percentage of income that could be subject to what's called unrelated debt financed income if you use leverage to invest in that real estate. So for example, I'm going to try and explain this using really simple numbers. Let's say your IRA is going to invest in we used a rental property, but if you want to, just replace it with assisted living center, that's fine. But if your IRA, let's say, for example, again, I'm going to use really like not numbers that are usually applicable, but let's say your IRA is going to buy a property for $100,000 and it's going to borrow $50,000, right? So 50,000 of the money is coming from what's in the IRA, and the other 50,000 is coming from a lender, right? So the lender lends the IRA buys the property, the IRA receives, let's say at the end of the year, $10,000 in income. From an IRS standpoint, the way they look at that, they're going to say, okay, well, 50% of that income, or $5,000, was earned by the IRA money, but the other 50% was earned by money from outside the IRA. It was earned from lent money, which means it's not tax sheltered, which means 50% of that $10,000 or $5,000 is subject to unrelated debt financed income tax, which means there's trust tables, right? So it's taxed at trust tables. So what that means is that the IRA would have to pay UDFI if it uses leverage, right? If it earns enough money and use leverage, then it would have to pay some tax. This is an expense associated with that the IRA has to pay, just like if the property has property tax, the IRA has to pay the property tax. If there's maintenance, the IRA has to pay maintenance. If you're having the property insured, the IRA has to pay the insurance, right? UDFI is just another expense. As the loan gets paid down, the UDFI would be adjusted accordingly, right? So let's say at the end of the second year, you've paid down to where now the IRA owns 55% and it's now 45% borrowed money, earned the same $10,000. Now this time the UDFI would be calculated based on $4,500, all right? I only mention this from a standpoint that if you're wanting to invest using your IRA and you're thinking of using leverage where the lender's going to lend to the IRA, then you potentially would be subject to unrelated debt financed income tax. Again, the title holder on the property would be the entrust group, FBO, your name and account number. All the rental income would get paid to the IRA. All the expenses would get paid out of the IRA. So the IRA is going to lend money, right? So this is one that we talked about. Now, in this example, we used help a family member with debt. But if you have people in your world, in your life, who want to get involved in investing with you in your assisted living centers, and they're going to want to lend money and they want to use their IRA to lend money, then this is how it would work. So in this example, nephew graduating from college, $60,000 student loan debt at 7.5%. So the uncle's IRA issues a $6,000 promissory note, at 4.5% interest. So the nephew is going to pay the IRA. So the lender on the note would be the Entrust Group, FBO, et cetera, et cetera. The interest would get paid back to the IRA. So if you guys are going to be, if you're interested in borrowing money, if you're getting money from private investors and they want to structure it as a note, then you guys would drop the promissory note. Their IRA would be the lender. Your company or you as an individual would be the borrower. You would pay their IRA back based on the agreement that you drew up in the promissory note. Okay, so this is kind of the last thing we're going to be talking about, and then I can take any questions you guys have. If you've done any research or if you do any research on self-directed IRAs, you're going to run across the term checkbook IRA or checkbook control. This is what it's talking about. So there isn't any like financial institution, any IRA company, custodian that's just going to give you a book of checks and say, go crazy, go invest in whatever you want. And in everything I've been talking about, the IRA is the title holder on whatever you're investing in, right? The IRA is going to own the real estate. The IRA is going to own the building that you're going to do the assisted living. The IRA is going to be the lender. The IRA is investing in a private company. Everything's done in the name of the Entrust Group, FBO, et cetera, right? All income gets paid directly to the IRA. All expenses get paid from the IRA. So in all those scenarios, Entrust has checkbook control over your IRA. Your custodian has checkbook control over your IRA. There is a way for you to achieve checkbook control by using an LLC as a pass-through. So when it comes to real estate, for example, which is one of the ways that we see this a lot of note investors like structuring through an LLC as well. If they're using their IRA to lend to a bunch of different borrowers or invest in a lot of different notes, instead of having the IRA hold all these different notes, they set up an LLC. They name their IRA as the member of the LLC. Again, the name of the IRA being the Entrust Group, FBO, right? The IRA becomes the member, but they name themselves as the manager of the LLC. So the individual account holder can be the manager. Note that I'm not saying managing member. I'm saying manager. The IRA would be the member. And so our account holder puts together the LLC, draws up an operating agreement, names the IRA as the member, finds a bank, opens a bank account, and then instructs us not to invest in real estate, but instructs us to invest their IRA in the LLC. The LLC is now being used as a pass-through to then invest in whatever they want, and in effect gives the account holder checkbook control over their IRA because they've named themselves the manager. They're the ones who set up the bank account. They're the signatory on behalf of the LLC, the signatory on behalf of the bank account. It gives them checkbook control. It's being utilized as a pass-through. So instead of the IRA owning the real estate, the IRA owns the LLC owns the real estate. So any rental income doesn't get paid to the IRA, it gets paid to the LLC. Any expenses don't get paid from the IRA, it gets paid from the LLC, right? But again, the LLC is just a pass-through. So eventually, if the individual wants to start taking withdrawals from their IRA, then it has to flow from the LLC back to the IRA, and then they take their withdrawals or distributions from the IRA. Okay? If anybody has any questions about that, I'm happy to answer them. So the big advantages of it, it gives you checkbook control. So again, if you run across the term checkbook IRA, checkbook LLC, this is what it's talking about. You have immediate access to the funds as the account holder. So you don't have to instruct Entrust every time you need a bill paid, you can pay it yourself. There potentially is some savings on fees because we charge transaction fees. And obviously it's a limited liability corporation, so you get some limited liability protection. Disadvantages, there are oftentimes upfront costs to create, particularly if you have to pay someone to help you set up the LLC. You're now responsible for record keeping the LLC, right? So any transactions that occur, bills that get paid, rent that comes in, you have to maintain that under your bank account that you set up for the LLC. So you have to keep your own records. Maybe subject to state taxes and filings, probably not taxes because it's a disregarded entity, but there could be some filings depending upon the state that you establish the LLC. Also, will point out if you are thinking about partnering your IRA with your own personal funds, or maybe your spouse has an IRA, or you have other people who want to get involved and you want to all invest in one let's say building that you're going to turn into a assisted living center, and you want to bring in many investors, an LLC is probably going to be the way to go, depending upon the number of investors, because now you're creating a single entity that like the people who are staying in that assisted living center have to pay to, as opposed to they would have to pay to multiple different owners if you partner into the building itself, right? Like if you have yourself and your IRA and maybe your spouse's IRA and some friends, and you're all wanting to invest in the same assisted living center, then when they pay, they would have to pay to all those different individuals, as opposed to partnering into the LLC. The LLC buys the building and owns the assisted living center, and then they would pay directly to the LLC. Entrust doesn't set up LLCs. It's not a service we provide, but we can refer anybody. We have a list of contacts and vendors that other Entrust clients have used to help them get their LLC set up. We can refer people to that. So that's kind of like the overview. To do this, it's really easy. You just open an account. We have an online portal. It takes maybe 10 to 15 minutes to get an account established. Then you fund the account, right? You transfer rollover funds from your current custodian, your 401k or your IRA, to your Entrust account. And then number 3 says purchase your asset. What it really should say is instruct Entrust to purchase the asset inside your IRA. So to summarize, self-directed IRAs is more true diversification because you're not limited to just stocks, bonds, and mutual funds. Gives you the ability to invest in something within your retirement account that maybe more than the stock market. You can invest in using any type of retirement account, right? Traditional Roth, SEP, simple 401ks, as well as HSAs and Coverdell's educational accounts. Investment options are almost unlimited. You're really kind of only limited by your imagination. Don't do a prohibited transaction. That's the IRS rules say that if you commit a prohibited transaction, you're putting your IRA at risk. What that means is that it could be determined by the IRS, if they were to find that prohibited transaction, that your IRA was no longer valid as a tax sheltered entity, which means everything gets distributed to you. And if you're under 59.5, there's also a penalty associated with that. So you want to make sure you're not doing anything that's prohibited. Okay, that's my presentation. Does anybody have any questions? Yeah, fire away.
I got a couple of questions for you, Bill. So one is the checkbook control. So if I wanted to be a private money lender out of this, I could invest, I guess I could be a private money lender to the LLC with a note. But when the LLC lends to the different properties or flips or whatever, then that LLC ends up having to pay the taxes. You said state taxes on that, but isn't there a tax implication doing it that way? Is it better just to go from my as a self-directed IRA and just lend directly to that person as a private?
Yeah, I mean, so first of all, your IRA wouldn't lend to your LLC. Your IRA would become the member of the LLC, and then the LLC would lend, right? So the LLC is a pass-through to lend.
Okay.
Or your IRA could lend. Either way, it really shouldn't be subject to any taxes, right? Okay. Because the LLC is owned by a tax sheltered entity. It's owned by the IRA. Yep, right. Okay. So whether the IRA lends to whoever or it owns the LLC and the LLC lends, it's from a tax standpoint, it's 6 of one, half dozen the other. It's not a taxable event. Yeah. Again, okay. The LLC, what the LLC does is instead of you telling us to lend the money and then they pay the IRA, you have the LLC where like you could put, I don't know, $500,000 in LLC and then lend to 5 different entities, right? And gotcha. So inside your IRA, there's only one asset, the LLC itself. And then the LLC holds 5 different notes, or your IRA holds 5 different notes, right? And so some people prefer to have the one entity, the LLC, and then hold all the different notes. And there is an advantage to that. Like we charge, depending upon whether it's a real estate backed note or if it's not collateralized or collateralized by something other than real estate, we have a transaction fee like of $95 for non-real estate, $175 for real estate, right? So in my example, if you do a one-time funding of the LLC, we're going to charge you $95. Now the LLC can do all these different notes, right? If you do 5 different notes within the IRA, and let's say they're all collateralized by real estate, 175, 175, 175, 175, 175, 5
Yep.
different times, right?
Yep.
So in that scenario, it's a big cost savings for you.
Yep. I like that. Okay. The second question I have is, do you have a simple one pager to give to potential lenders, at least to get their mind wrapped around it? I mean, we work with some private money lenders for some of the stuff we do.
Yeah.
And some of them are very sophisticated and some of them are very brand new, and they think it's great. They love the story of investing in real estate. It's backed by, real estate. They're on the insurance, all of that stuff.
Yeah.
But getting to the self-directed IRA point, if they've never heard it before, is kind of like, you know, it's a little fuzzy. And I feel like we do a pretty
Sure.
good job, but is there something you have look, here's the starting point.
Yeah.
This is the graphic. If you can follow this cartoon, the next point would be, we're going to have you meet with Bill, and Bill's going to get you more comfortable with what this really is.
Do you want something more note specific, lending specific?
Yes. Yes.
Okay. So I'll make sure I have your contact info. We definitely have something that we call the basics of self-directed IRAs, right? That just sort of explains the basics of it. And then I'll have to look to see what kind of collateral we have that is focused on notes. So I don't have one page that covers both.
Yeah.
I definitely got something that's the basics of self-directed IRAs. And then let me see what I can come up with as far as notes.
Perfect.
We have stuff, like we have a ton of things. Like it's really,
Yeah.
for me, it's like what not necessarily looking to see if we have something. It's going to be what's the best thing I can give to you, because we have a ton of stuff.
I think it's just educating people to say, if you're going to invest in a syndication, my opinion is, don't use a self-directed IRA in a syndication. You're already going into a tax advantaged situation. So it almost negates itself. I'd rather use that self-directed IRA as a private lender versus taking your personal money. Now you're going to pay taxes on the interest and all the other stuff. So just trying to break that down, I think.
Yeah, I mean, I think I agree with you to some extent if people have the choice, right?
Yeah,
like sometimes people, the money is where the money is inside their retirement
Sure.
account. And if
Yeah,
they want
if
to
they have
invest
a
in a
choice.
syndication, that's where the money is.
Yeah.
And also one doesn't preclude the other, right? Like, I mean, because you're investing in a syndication inside or outside your retirement account doesn't preclude you from investing in real estate inside your syndication inside your retirement account as well. But yeah, I mean, from a tax advantage standpoint, like it's already a tax sheltered entity, right? Like that's why like using an IRA to invest in an opportunity zone doesn't necessarily make a lot of sense, right? Because one of the big advantages of the opportunity zones is associated with the tax breaks that you get with it, whereas inside an IRA, it's already tax sheltered. So what you're really focused on is return, right? Like the whole purpose of investing in using the retirement account is what's going to be your return on investment, right? That's, you want to get the greatest return that you can, not necessarily be looking at what's the tax advantages associated. It's already a tax advantaged account.
See, that's a good little nugget there. It's the overall return. I think that's, okay, great. Thank you.
Moosh?
Yeah, if you have money in a different form of an IRA, not a self-directed, does the whole amount have to transfer over?
No.
Okay.
No. You're allowed to have retirement accounts with as many different custodians as you want. I would say by far and away, the majority of our account holders have an account with us in which they're holding something alternative. And they also have an account, an IRA with a brokerage firm where they're holding stocks, bonds, and mutual funds, right? Like usually they parcel out a piece to move to us to throw in a note or into real estate.
What's that parcel out kind of process? I guess what I'm asking. If I have a Fidelity,
like you would do. So depending upon the type of account you're moving from, it's either a transfer or a rollover. And so if it's coming from a qualified plan like a 401k, it's a rollover. You would contact your plan provider tell them you want to do a rollover. They'll have paperwork for you to complete. And then just on that paperwork, you specify the exact dollar amount you want to roll over, right? If it's going from one IRA to another IRA, it's a transfer, and you fill out the transfer form of the custodian who's receiving the money. So on our transfer form, we have two boxes. One says full transfer, and the other one says partial transfer. And then there's a line for the exact dollar amount. So you would select partial transfer, just type in the exact dollar amount, and then send it. You just have to make sure that your custodian that you're transferring from is liquidated, whatever you want to transfer, right? Like you have to make sure that it's available in cash, because you're not transferring funds to us or stocks, you're transferring cash. But yeah, it's just the paperwork. You just have to instruct, you're instructing your current custodian to send whatever specific dollar amount you want to send.
Got it. And then I think you touched on the fact that if you plan on being an operator, like even if you have like administrative role or ownership role, you cannot use the self-directed IRA. Like in
Yeah.
in the case of like assisted living, residential assisted living.
Yeah. So let me sort of expand on that as best I can. The section of the code that deals with prohibited transaction, which is section 4975, has a lot of room for ambiguity. So when it I got a fly buzzing around me. When it comes to real estate, the staying in the property and doing like physical labor, right? The swinging the hammer and those types of things is pretty black and white, right? You can't do that. The disqualified person can't do that if your IRA owns any percentage of the property. When it comes to businesses, it becomes a little bit more ambiguous, right? So it's tough for me to sit here and say like there's a bright red line that says like you can't have any involvement when it comes to something like, I don't know, administrative services, for example. Like what I mean by that is like when it comes to real estate, for example, like you can be responsible for your property, which means like you can interview prospective tenants. You can, like if you have work that needs to be done, you can go to the property and show them what work needs to be done. Like you just can't do the physical labor part of it, right? So where does it cross over to being prohibited to not being prohibited? It's not a bright red line, right? Like it's hard to answer that question when it comes to something like, you know, can I do my own bookkeeping associated with that? Like, I don't know that you can't do that, right? I would say that you can't, like, if you have an assisted living center, you can't be there, I don't know, like making the bed and, you know,
Right. You're
like,
not like the primary function of that, of the residential or assisted living business is caregiving, right? I get the fact that you're not caregiving, right? Like, but if you're doing, yeah, I mean, I think I'm kind of understanding where you're going. I mean, I think, you know, the books and administration back office, interviewing, you know, potential families or, you know, things like that, or finding an administrator, you know, that's all fine. I think if the layer is there, I think if there's an administrator, I think this gray area is fine, right? Because there's someone that actually is responsible for the people that are caregiving, you know, and the overall administration. And if I'm the owner that's managing the administrator and doing back office, I think it should be okay. But I'll look into it too. Can you pop whatever that code is into the chat? I'm probably going to take that code, put it in Chat GPT, and then ask Chat GPT all these questions.
Section 4975.
In that scenario, couldn't he have the self-directed IRA own the real estate LLC and then the operations LLC be different? And so then if it's in the real estate, then there's really nothing. It's
good call on that.
I mean,
that's a good call.
You're very much getting into a gray area that it's hard for me to give a black and white answer. I will add on that one of sort of the qualifiers, or one of the things that will like go from where you're maybe on this side of the line to like, or, you know, you're in the gray area, and where you're crossing over to where you're leaning towards a prohibited transaction would be if you're taking a salary, right? So if you're if you're an investor, right? If your IRA is an investor in an assisted living center and you're also an investor, right? So your IRA and your own personal funds. And so any return on investment gets paid to proportionally to your IRA and proportionally to you, then I think you're okay, right? And some of the like being able to do like being responsible for the asset. But if you start paying a salary independent of return on investment, right? Like you're saying, I'm gonna take a management fee of whatever, $50,000 or something like that. Now you're crossing over to where you're creating a prohibited transaction.
Could you take the management fee or the salary from the operations LLC, and then any income from the property LLC goes right back into the self-directed IRA, and then they're two different businesses?
Yeah, I mean, I don't think I know enough about like how it might be like in this type of operation would be
And this is,
structured
by the way,
to
Bill,
do
this is
that.
how we typically structure these. I mean, there is a operations a LLC, and then there's a real estate LLC. Usually everything's not tied up in one.
Yeah.
Yeah.
I
That's
think
what-
the
Yeah, I mean,
question,
I
the
would
question there,
encourage.
Robert, remember Kim's thing about the cost segregation. If
Yeah.
we end up doing the self-directed IRA into the property LLC, then we lose out on the cost segregation. Bill.
Yeah, that's right.
and
All right, we'll figure
the
this out and
case
get
you-
back to
Figure it
everybody.
out.
the
I
case
mean,
that you
that,
described, Robert, too, I wonder if you're renting from yourself, which makes it prohibited.
Yeah.
yeah, that would
Yeah.
very much make it prohibited. I mean, and as I mentioned at the very beginning, like we don't provide like advice, right? So including we don't provide tax advice. So,
Yeah.
you know, that would be it would be a conversation we would encourage you to have, like if you're getting into that with a tax attorney or a CPA, to have them look at that section of the code, which I'll go type that into the chat area right now. That, you know, have them take a look at it and get their input. But, you know, it's not black and white. Like I can't emphasize that enough, like the amount of ambiguity. And I don't think like that I'm not, I think, breaking new ground by saying that there's part of the Internal Revenue Code that's like ambiguous, right? So, but yeah, I mean, you know, I will add on that, like, so the Department of Labor provides these things called advisory opinions. So it's Department of Labor that oversees qualified plans, right? And they will provide advisory opinions, which don't cost anything. And one time, and this was a number of years ago, where somebody in our company had sent us a whole bunch of advisory opinions. They got like their hands on that the Department of Labor had provided that, you know, were associated with prohibited transactions. And I remember reading through them and seeing some of these saying, hey, I want to use my IRA this way. I want to do this. And I read it and go, there is no way. That is blatantly prohibited. And the advisory opinion was like, sure, you're good to go. And it's just like, you got to be kidding me. I can clearly like feel like it's something that I have a pretty good understanding. And it made me feel like I didn't know squat about what it says in the code. So, you know, you get into, and I guess the other qualifier add on is that it would need to get audited, right? I mean, it's something where like, it's almost like exaggerating your charitable deductions, right? I mean, if you, as long as you don't get audited, like you're good to go, right? But there is a big risk, right? If a prohibited transaction disqualifies your IRA, right? It means that if it was audited and they looked at it and determined that you committed a prohibited transaction, the result is that they say your IRA is no longer, that IRA is no longer a tax sheltered entity. So that means that everything is now distributed to you at the time that the prohibited transaction occurred. So if they audited 3 years ago, and like in those following 3 years, you got like made contributions and got return on investment, blah, 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 then that disqualified as of 3 years ago, which means you might have to restate your tax returns. And so it can be a major pain in the ass. So I'm not encouraging anybody to like skirt the line or anything like that, but it's a section that is sometimes hard to have these conversations. Like some of the stuff, like I said, with real estate, can't use it for personal use, that type of thing can be very easy. But getting into other areas, and I get these calls a lot of times. People call me up and want to ask these really obscure, like, well, could I do it this way? And I'm like, I maybe. Like, I'm not the person to, like, I'm not the one bearing the risk if you commit a prohibited transaction. Like, that's the other thing, like, I always tell people. So, Anyway, enough about that. Good questions though.
Well, any other questions? Going once. Okay. Well, Bill, that was a very good presentation. We sure do appreciate you taking the time for us tonight.
I appreciate being invited. You guys feel free to pass on my contact information to anybody who has any interest, is thinking about doing this. And Robert, yeah, let me tomorrow, let me I like I said, the basics of self-directed IRA I can send easily. Let me look for some note specific stuff that we have. I know we have stuff, it's just a matter of finding the right thing.
All right. And I want to remind everybody that you can download the chat so that you have all the contact information, all the links. I believe Bill put his contact info in there as well. And to wrap up the evening, we have haves and wants. So if anybody has something or wants something that they want to present to the group, now is an opportunity.
I'll stop my share now.
Do whatever you need to do.
I'll throw something out there. I'm looking, if anybody has any, or Vern, I should probably connect with you if you hear of anything available for residential assisted living in Michigan. That's 20 beds or near 20 beds. I'd be grateful to hear about it.
All right, I'll keep my ears and eyes open. I did have a Utah one cross my desk today that was, I think, 16 beds. I don't know anything about it yet, but figured I'd share that with the inner circle. Somebody may want it. Okay, anybody else have or want?
Mudge here. I am in contract in Colorado working with Vern, but if you know anybody that's selling in Colorado residential assisted living properties, let us know. Although I think Vern usually finds out, but you never know.
Usually. All right. Well, if nothing else, then I'm going to thank everybody for joining us tonight. Reminding you, if you're in Colorado, we'd love to have you join us next month in person. I'm sure I'll be buying a drink for everybody. And for those of you out of state, I still have to noodle through how can I do a hybrid? Are we going to even have a presentation, or we're just going to network? And otherwise, we'll be back in August online for our next presentation, which I don't know today what it is. And thanks everybody for joining us tonight. And I hope you all have a wonderful evening and a good holiday coming up next weekend.
Thanks. Thanks again, Vern.
You're welcome. Thank you, Bill.
Thank you.